Good evening to everyone, to our speaker and our members who are joining gradually. So today I take a pleasure to introduce our speaker, Vipin, CA Vipin P. Batavia, sir. And today's session is on recent amendments on charitable trust. So it is my pleasure to introduce you, sir. CA Vipin P. Batavia, qualified in the year 1985 and practicing independently since sir has started. So sir's main area is on direct taxes, audit, and achieved expertise on the formation and taxation of charitable trusts, and also related in the areas field of charitable trust, NGOs, clubs, and associations. Professional achievements. Sir has been president of Chamber of Tax Consultants in the year 2003 to 2004, and office bearer of Chamber of Tax Consultants for more than 5 years. Chairman of various committees and was chairman of Journal Committee of CTC for 3 years, publishing Income Tax Review, a renowned magazine. Actively involved with various committee of BCAs and WIRC. So achieved expertise in the field of charitable trust, handling every matters on charitable trust, including formation of charitable trust, procedure followed with Office of Charity Commission, registration and various exemption under ICAI, such as under Section 80G, 10 bracket 23C closed, under Section 35. And sir has delivered a lot of lectures on charitable trust and in and around Mumbai. Sir has written many articles in professional magazines, newspapers about charitable trust, and his philanthropic activities, and he is also owning a charitable trust. So thank you so much, sir. It is going on and on. So today's session is over to you, sir, and I'm happy to invite you for today's sessions. The session is over to you, sir.
Yeah, thank you, madam. Now PPT open kariye aap. I'll just open my PPT.
Yes, sir.
Recent amendment aa rahi hai.
You just need to click on the share screen, sir.
Shall we to add my PPT?
Yes, sir. We will share the PPT from our end, sir.
Sir, you just click on third button right below the orange arrow mark. It should be visible.
This one.
Right below the video button. If you click on, yeah, now it's
Yes.
visible. You just put it in slideshow mode, and you can start with the session, sir. You stopped again, sir. So click again. Click again, please. Click on the same button. Now it's visible. Now click on the center of the PPT, and you can run through the slides. Function F5. It's visible. You can do it this way also, sir. Just click down, it should be visible.
Just press the down arrow, sir.
Down arrow can microphone ready. Speaker. I like to module change. They're getting delayed. Attendance chat.
Hello, sir. You can. It's visible, sir. You can continue on that.
No, but I am. It is not visible to me. My PPT.
Okay, if you click on the PPT, the video will go at the backstage, sir. Or you're not able to see?
No.
1 minute. I'll just try to open the PPT. 1 minute. I'll try to share this on my own. 1 minute.
Now PPT has come, but my video is gone.
Yes, a video will be at the back end only. Okay, PPT will be in the front. You can start with it as such. You'll be still
No,
visible
even
to the
back
audience.
also it's not there.
Sorry, sir. 1 minute. I'll try to open the PPT. Wait in the case. You are visible to audience.
अभी किधर बड़ी भाई
1 minute. I'll try to share it from my end itself. So I'm sharing the screen, sir. You just turn on your video and you can continue with the presentation.
Video is getting on. Webcam is gone. अरे यार
It will turn on in a while, so you can start with the presentation. No problem. Yeah, it's visible, sir. You can continue now.
but myself is not visible.
You are visible to the audience, and the PPT is also visible, sir.
Okay. Just a moment. I'll just try last one.
You need to maximize the button. That's it.
Maximize क्या है?
Double click on the center of the screen. It should be on the full screen.
बढ़ता ही पड़ा यार. हमेशा hidden है. Web camera. View everyone. Hello.
Yes, sir. Is it visible PPT and yourself visible to yourself?
PPT and busy. Now it has come. It was off. And I'm kept on changes.
Okay. Now you can continue with the session, sir. You can press down button on center of the screen. It will make you to change the PPT from your end itself. Okay. Just click on center of the screen where PPT is visible. You can click down button. It will automatically change the PPT. Is it now, sir?
Good evening, friends. First of all, good evening to Chairman of SIRC, Mr. Chinamistan Talagyala, Secretary of SIRC, Mr. Naresh Chandrageli, seniors in the profession and friends. First of all, I thank organizers or SIRC committee for considering me as a speaker on this subject, which is very close to my heart. I like this topic from my heart, so that's why slowly and gradually I am on charitable trust provisions and regularly learning and day-to-day practicing on the same subject. First of all, sorry for postponement of the date. It was earlier on 18th because due to my ill health, I could not speak on the same day, because speaking 2 hours requires a fresh and I was advised to take a rest. Secondly, I am just covering recent amendment under the Income Tax Act. That is taxation. Recently means last 2 years can be recent, but I have covered since Finance Act 2018 because there are some important amendments have been started from Finance Act 2018, which also kept to be kept in mind because now reopening and assessment, those things are going on. So just brushing your earlier memories, the amendment have been done for the Finance Act 18 onwards. The views which I am going to express is my own view. One may differ to that. I am open for discussion. If whatever the system SIRC is maintaining, whether during the topic itself or at the end of the session, question answer can be raised. I don't mind, or I would like to discuss the issues on the same point at the same time. So let us come to the topic proper. We have seen in recent time, last 4 or 5 years, there are so many amendments having far-reaching impact on the taxation of charitable trust. And it is so much of confusing that even we chartered accountants have to read twice, thrice what is the provision, for which year what is applicable, for which year what is not applicable, from where, how to take care, which dates, and it is all watertight provisions. There are particular dates are given, you have to complete that process, otherwise you lose exemption. Government is giving exemption to the charitable trust because the trusts are doing charities, which is basically the duty of the government to provide education, medical, relief to poor, food, everything to the citizens of our country. For various reasons, they are unable to do it. So, if others are doing that, so government has thought it's well thought that let us not tax that income to the charitable trust. But it is subject to conditions. And those conditions are so harsh, and those conditions are day by day, they are making it harsher and harsher. And not only that, you will see the amendments which have been carried out, they are justifying those amendments. Just for your information, 3 days ago, our organization, the Chamber of Tax Consultants, is very old organization, 96-year-old organization, have organized a seminar on this topic, wherein the Under Secretary Neha Sahai from Delhi and Joint Secretary Kamlesh Varshne from Delhi, CIT exemption Bombay, and other two professionals were monitoring that discussion, wherein we discuss and put the questions before them. And they try to justify why these amendments have been brought in. So, okay, government has brought justified, and they have accepted certain, they realize certain amendments that they will consider it. And my certain answers will be related to that discussion, because what is their view is also equally important. We can find the case, the courts are there open for us for any interpretation. But what is their view, what they want, why they want it? So that is what is I'll be during the session, I'll be looking at that. And another thing is, sorry for delay, I think 15-20 minutes we are already late, so I'll be going little fast. The Finance Act 2018, wherein amendment has been brought out in section 1023C. So there the provisions of section 40A 1A, that is TDS provisions, And section 40A3 and 3A will apply mutis mutandis to section 1023C. The provisions as it is, whatever is there, will apply to charitable trust as well, which was earlier not applicable. So if TDS was not done before this amendment, there was no disadvantage. 40A3 and 3A also, 40A3 and 3A also the same position. It was not. It is brought into the statute that it will be applied, but they have written mutatis mutandis. Means whenever there is amendment in those sections, will automatically apply to the charitable trust. So as it is, it will apply year to year. So that is what is they have amended, and the same provision, because they have brought new 13 proviso to 1023C with effect from 1/4/19, that is assessment year 1920, and the same thing has been brought in to 11 also. Means all the trusts, whether it is 1023C or claiming 11, these provisions are applicable to both of them. Then 11(1)A and 11(B), both are same provisions are applicable. So there is only one major amendment, but the small amendments are there. Next. The Finance Act 19. During the Finance Act 19, new procedure has been brought in for registration, which was amended. So 12AA 1B provides the principal commissioner or commissioner will call for all such documents and information as may be necessary to satisfy himself about the objects of the trust and the genuineness of its activities. It's a very old. While registering, they inquire about genuineness of the activities and satisfy himself about the objects of the trust, whether it is falling it's allowable or not. Then accordingly they decide for registration and cancellation. But from 1/9/2019, one more condition has been added there, that commissioner shall also satisfy himself about the compliance of such requirements of any other law for the time being in force by the trust as are material for the purpose of achieving its objects. Mind the wordings. Means they have not specified what laws, but any other laws. Now, any other law is, we can understand, which are applicable to charitable trust has to be seen. That the law and the provision which are not applicable to charitable trust will not be covered. Second is, if there is non-compliance under the requirements of those laws, which are by the trust as are material for the purpose of achieving its objects. If it is not material for the achievement of our objects, then those non-doing of compliance with any other law will not covered in this amendment. Now, for example, suppose if you want to run a nursing home, or if you want to run a hospital, or education, some small school, KG school out there, and you have not taken permission from the required authority in Bombay, it is Bombay Municipal Corporation, or any other authority to run that school or hospital, and you are running that, then that becomes achieving for the purpose of objects, because then you are defaulted for not taking that license. But your object is to run the education institution or medical center, and you need that license. You should have obtained that license. If not license and you are running that, there is one of the point which on that ground it can be rejected. Now, second, for example, there are a small, say, professional tax, state small tax, or PF is not deducted, or some small payments, some defaults are there, which are not effecting for the achieving purpose of the objects of the trust. So those will not be covered. Only where you have to see which are affecting the objects of the trust, those also will be covered. Accordingly, from 1919 it has been added. They have not mentioned for which assessment year, but any application made for the registration after that will be covered. This is my view, and they are doing it. It is already 3 years old provision. The amendment provides that compliance of such other law, time being in force of the trust, are to be material for the purpose of achieving object that we have covered. Now, additional ground added for cancellation of registration. That the same wordings has been brought into the cancellation for registration, that is amended section 12AA4. That is the same from 1919. The only difference there is the trust has not complied with the requirements of any other law as referred in section 12AA1A, and the order, direction, decree, by whatever name called, holding that such non-compliance has occurred, has either not been disputed or has attained finality, will be an additional ground on which the registration will be cancelled. So unless those compliances, whether it is not disputed or has attained finality, then in that case, that can be taken as an additional ground for cancellation. While granting the registration, he has to see whether they are following compliances or not. If compliances are not followed, then he cannot grant. He may reject the granting of registration. But so far as the cancellation is concerned, the same activities or the same non-compliances, unless it is reached to finality or unless it is any order, direction or decree, whatever name called, it is passed against the trust, then only on that ground it can be taken for the cancellation. So this is the difference between granting of registration and cancellation. Finance Act 20. In Finance Act 20, new rules for registration and new registration procedure has been brought into the statute. New rules for re-registration and new registration was notified on 26 March 2021. What gazette numbers? So and so. New amendment and rule came into force from 1/4/21. Initially, it was from 1/4/21, means assessment year 21-22. However, due to COVID situation, it was postponed to 1 year and hence are applicable from assessment year 22. So this is one area wherein lot many amendments have been brought into, and many questions and many problems were there in this new system. Earlier registration and approval under section 1023C was valid up to 21-22, because it was earlier it was given perpetual, and now in the new law it is given for the 5 years. But it was as per the amendment in Finance Act 20, it was for 21-22. But due to these extensions, it is from assessment year 22-23. You will see the registration French certificate which has been issued, order for registration, where it is assessment year 22-23 to 26-27 onwards for 5 years. That we'll see later. Earlier registration up to 21, all existing trusts were required to reapply for re-registration. And ATG also was required to be, people must have done, all you have done. Only thing I am bringing what is the law at present is, and then there will be what are the problems thereafter we are facing. So re-registration application, that form 10A was prescribed and it was to be filed, and there were so many problems. Main problem was in form 10A was the one question where there it was mentioned that whether organization is having a clause for, sorry, it is whether there is a clause for cancel, clause also withdrawal of trust deed. Now, stamp was submitted, the Form 10A, which was application form for re-registration. The last date was submission was 31/3/22. So everybody must have, we were knowing that they have applied for that. Indirectly, there are the defunct trust which are not doing anything, lying as it is. Nobody was bothering about those trusts. Those are automatically have gone out of the net of the income tax registration, ATG as well. Or those people who they did not wanted to go for that income tax registration because after the taxability of the dividend income and mutual fund income, which was earlier exempted, was being made taxable, then certain trusts were preferring that non-registered trust will be beneficial to them. The new registration was granted within 3 months. It was the provision for that it is to be granted in the 3 months, and there were no much requirement, only the filling of the form, and so many few attachments were to be attached, and every trust has been centralized. There were different commissioners were having files and record for the trust registered in their jurisdiction. Were lying with the registration. All India combination or All India information or All India number of trusts were not there available with the government. It's a good thing that it has been brought to the one center, that is at the CPC Bangalore, and there they have allotted to every trust one URN, and registration is granted from 22/23 to 26/27. One more new concept has been brought in, that is for the provisional registration is to be done. Every new trust which has been incorporated, or whether Section 8 company or local. I think one more thing I want to just cover here is, see, there are many state law, say in Gujarat, in Maharashtra, Rajasthan, MP, there are nearly 12 states are having state law. So in Maharashtra Public Trust Act, in Gujarat Public Trust Act, Rajasthan, but in whole of the South India, there is no state law. There are other states and union territory where there is no local law. So here we have to get our registration, either Section 8 company or under the Societies Registration Act or under Maharashtra Public Trust Act. We get registration and then go for 12A registration. So there the trust deed is registered with the Register of Assurance. Here it is registered with the authority, state authority, or Section 8 company is formed with the ROC, and then go for registration. So now any whether Section 8 company or any trust which has got the charitable objects can apply for the provisional registration. Now in provisional registration, earlier there was a lot of litigation about the conduct of activity, because the words mentioned in the law was to verify the genuineness of the activities. So department was saying, unless the activities are conducted, how we can satisfy? And there were many case laws that it is not necessary, only the object should be charitable, and accordingly registration should have been granted. So in that case, now they have brought in that first they will give the provisional registration. Once you get the trust deed and get it PIN number, and you apply for the provisional registration, you will get it. So the provisional registration is granted. This is a new concept has been brought in. Even the earlier old trust also who were not having a 12A registration can go for provisional registration, because then they can go for regular registration. I'm using the word regular registration for that 5-year period registration. Now earlier it was perpetual. Now it has been brought into restricted the registration period is to 5 years. Now the provision says this way for provisional registration. The application for provisional registration is to be done 1 month prior to beginning of the previous year pertaining to assessment year for which the registration is out. Means if you want registration for say assessment year 23-24, then 1 month prior to previous year, means financial year 22-23, 1 month prior to in means February 22. You see, 1 month prior to previous year pertaining to assessment year for which the registration is out. So now new trust will get provisional registration after 1 year only. In the 3rd year they get. So in the 1st year they don't get the registration. All the trusts which have been incorporated or which has been formed will not get registration the 1st year. But in these new rules, there was one exception was added, and that exception was that where the application for provisional registration is made during financial year 21-22, the provisional registration will be granted from assessment year 22-23. That exception was added only for 1 year because they wanted everything from that for that year 22-23 assessment year, then it will continue that way. The trusts who have obtained provisional registration at 12AB, because new section 12AB has been replaced to 12AA. A new procedure is under section 12AB, and the provisional ATG certificate have to apply for regular registration at least 6 months prior to the end of the period, or within 6 months from the date of commencement of the activities, whichever is earlier. Now here the question arises, okay, now if an old trust applies for provisional registration, these activities are already going on, they were not registered. So in that case, according to me, within 6 months, from the commencement of the activities. So activities are already going on. So immediately they have to apply within 6 months, but immediately they should apply for a regular registration. And for that, there are different provisions we'll see later. For ATG also the same thing is there. Or if activity is not commenced, you have not started the commencement of the activities, then after 2.5 years, 6 months prior to the end of period, because the provisional registration is granted for 3 years. That we see in the point number 8. The trust claiming 1023C will not be now entitled to claim exemption under section 11 available for having registration 12A, 12AA or under section 12AB. As per new amended, the IT registration will be inoperative if the trust is claiming exemption 1023C. So that is section 11(7) has been added, wherein it has been given in the new rule that now 1023C claiming trust institutions and having 12A registration claiming 11. Earlier there was no restriction claiming both of them. Now they have brought into the statute that you can claim only one. So in the first year you decide what you want and accordingly file the form 10A and accordingly that approval for 1023C. Now mind it here, these 1023C are applicable only to registered trusts which are under subsection 4, 5, 6 and 6A. Subsection 3 is automatic. You have not to get the approval. If you are having certain conditions are fulfilled, if there are certain requirements are fulfilled, automatically you get 1023C, 3AB, AC, AD, AE. in different hospital and education. Mainly it is for educational institutions and hospitals. There also limit is increased. We'll see later. So available is having that. Then those trusts will get only 1023C. They will not be entitled for 11 from that. And but there is a one chance is given that they can change to other regime. They have divided in two regime. One regime for 1023C. Second regime is Section 11. So if you are claiming in the first regime, then you can shift to the second regime. That is, the provisional wordings are such that you can change it once. You cannot go on changing. There is one more requirement for getting re-registration. That is, amendments or modification done in the objects of the trust are required to apply for re-registration within 30 days from the adoption of the modifications. So, in this regard also, Form 10A is to be filed. If there is modification or amendments are carried out by the trust in their trust deed and object clauses are being changed, then they have to apply for re-registration within 30 days. And there is a rider with that. If a trust has changed its objects which are not as per the objects on which the registration was granted, then only it requires to be re-registered. Now, suppose if the object is education and there are further expansion in education only, then it is not required because the education object is continued. But if there are expansion and new objects are being added, then they will satisfy whether they are as per the law, whether they are charitable or not, whether falling under the conditions prescribed with the new provisions. Then they can re-register. But it is to be re-registered within 30 days. If you miss that date, what will happen, we'll see, because you lose registration automatically. That is also one hierarchy you will see if people have not filed the application in time or filed late. So they are facing that problem. Now, question arises whether the commissioner or principal commissioner, whoever is going to grant you the regular registration or provisional registration or re-registration, what powers and what documents he can call for all these types of different situations. Now that I have been mentioned in point number 13 that already registered are approved under old regime, because the trust already having registration where there is a toilet registration, the commissioner or DGIT, in fact DGIT CPC was in charge for this re-registration procedure, because Form 10A, because they have prescribed the new rules where the forms are prescribed for everything. 10A for application, if the register for same form for ATG, for 1023C, for 11, the same form is to be used. So in that case, you have to decide and fill up the form accordingly and go for your required registration or approval ATG or 1023C. Or even section 35 also the same. Here, in the first situation, the commissioner had no power to call any documents, no power to inquire anything. If toilet registration is there, certain document they wanted, and those documents are attached with the form itself, they were immediately granted. There were so many problems. Few trust lost their registration certificate. They were not having duplicate. They were not having approval for ATG or 1023C, and those problems were faced by in those days. But after authority realized that this is not correct. So they said, if you file one affidavit for regarding that, we will grant you the registration. All other documents and other things are there. And accounts, filing of account was also a big question at that time. So there was clarification. If the last return is filed, then accounts were not required to file. But the person who has not filed the return earlier, previous year or previous 2 years, they have to file all the accounts and other documents along with that. Then second is registration under new regime, that is provisional registration. Under provisional registration also, you have not to file any document unless a few basic documents like PAN card, KYC of the trustees, and PAN card registration, trust deed. These basic documents you are required to file, and if you file along with that application, you get the because the time limit granted to the HR. In all these new provisions, even department has also do the registration or cancellation within the fixed time period. So that's a good thing that we are sure that if you, because for the provisional registration, it is within 1 month from the end of the month in which application is made. So in 1.5 months or 2 months, you get it. Provisional registration to regular registration. So one has to, or if they want, because it is voluntary. There is not compulsion. It's not mandatory. You may go for without registration. So that provisional to regular registration, I am using the word regular registration, which is for 5 years. It's a regular registration, provisional, and re-registration for old trust and where objects and modification have been carried out. Provisional registration, in regular registration, they will ask for all the details. They can ask any documents. They can ask any explanation. They have to satisfy themselves whether the trust is have genuine objects, charitable objects, genuine activities, and compliances of any other law. Those things will be verified, seen. If he is satisfied, he will register for the regular, and you will get the registration for 5 years. Here question arises whether once the provisional registration can be granted or rejected, particularly ATG. ATG also the same, provisional, and can be granted or it can be rejected. So in that case, now whether it will be granted from which day, from application, from the assessment year, or from which. So the wordings and the provisions are such that it says that the unique number which they have allotted, that it is not allotted at all. The provisional registration, if it is rejected, means it rejected from ab initio, and if it is granted, then granted from ab initio. From there, then it will be for the five years period. So there are certain practical problems being faced by the SSC trust, where ATG, early registration, if it is cancelled, you know it is unregistered and you have to file or pay the tax accordingly if it is taxable. Excuse me. But ATG, a provisional registration has been obtained, and you start collecting the donation by saying that it is ATG is available, and then if that ATG is rejected, then they will face the problem. Those donations which they have collected, there will be problem with them. So in that case, it should be very careful while taking those donations. Unless the regular registration has approval has been granted, you should. It is not advisable to issue the receipt or to tell to the donors that ATG is available. It is subject to renewal, means subject to regular registration. Then application for renewal of registration. Now renewal word is used here is for 5 years. Means when the 22 to 26, 27 assessment year registrations are granted, you have to apply for the renewal of registration. The same procedure which they have adopted earlier in FCRA provisions. But in FCRA provision, in the law itself mentioned from this date to 5 years, that is the period for which the FCRA registration will continue. There was no provision brought in for re-registration. Here they brought the re-registration, the 5 years, the same in FCRA is also for 5 years. Here also they have made it 5 years. And they want to check every trust, their activities, and their how the things are being functioned, how the donations are collected and being utilized. So now the trust has to be very careful, and they have to see and act as per the properly as per the act, rules and law. Otherwise they will face problems. Heavy tax liability may come on that. There will be many problems for the charitable trust. So that also, in that case where the renewal is to be done for 5 years, there the conditions are 3 years accounts, 3 years details, trustees activities, and then other that so many things we'll see. Books of accounts also they have prescribed. There also there are so many problems, but they have prescribed it. So before the expiry of 5 years, means 6 months prior to expiry of that 5 years period, you have to apply for that. The word used in all the sections for the application, at least say 1 month before, at least 6 months before, at least 3 months before, whatever. So you can apply earlier, but not too early. I think a year before, means if you are 26, 27, so January, February 26, you can apply for that. But now we'll see later on. If you miss these dates, so what will happen? Then re-registration due to changes in the objects. They may ask any details, any question and documents. There are so many amendments in the cancellation. They have tightened up the provision for cancellation of registration. They have got a brahmastra. I am using this word. Anything if you do not do properly, you will cancel your registration. And what is the impact of cancellation of registration? You lose exemption. Amount spent on the objects of the trust will not be allowed as a deduction. Then except now amendment is there for certain 215 or certain other 13(1)(c) and 13(1)(d), if it is added, then in that case some expenses will be allowed. Otherwise you have to pay the tax. And most importantly, the provisions of aggregated tax will apply. This 115 TD to TDR. So those will apply. So that will be a great problem for the trusts which are having immovable property, because the taxes MMR it is to be paid in that case on the market value of the assets. So those provisions will attract. So it is advisable that every trust has to be very careful about the functioning of their activities. What they want seriously, it is to be kept. It is to be either in time. All the provisions are being now made time-bound provisions. If you miss the dates, you are in the problem. You are in the soup. The problem. So many. Now, provisional registration of the trust. Now, I am coming to in detail. Provisional registration for 3 years. It is at least 1 month prior to the commencement. We have seen that. 6 months before you have to apply, that we have seen. The provisional registration can be converted into regular registration. The CIT can make any inquiry when it is been converted into that. And the point number 15, application for renewal of registration. Then also we have seen 6 months before the expiry of the date you have to apply. You can make any inquiry and compliances. A slide આગળ પાછળ થઈ ગઈ. While granting the registration or looking at the provisions for cancellation of registration, the PCIT, CCIT and CIT has to verify that there any specified violation is done by the trust. Now new separate concept, they call it clarity. For clarity purpose they have brought in. Now specified violations are defined. Which are the specified violation? Because of that, if anything occurs during that period, they can cancel. So specified violations are any income of the trust or institute has been applied other than objects of the trust. The trust has income from profit and loss, profit and business. It should, if it is not incidental to the objects of the trust, the trust or institution is carrying on business activity which are incidental to its object, but no separate books of accounts are maintained. These are the requirements. The trust or institution has applied any part of the income for private religious purposes, which is not for the benefit of. If it is private religious purposes utilized, that is one of the condition, specified violation. Any activity carried out by the trust or institution which are not genuine or not in accordance with all or any of the conditions or objects to which it is registered. On conditions, I'll just, for this last point, we'll cover that. The trust or institution has not complied with the requirements of any other law which are material for the achieving this objective. So these are the points they have prescribed as a specified violations. So they will check the activities conducted during that period. If there is any violation is done, that also will be considered. Then another point further is whether proper books of accounts and records are maintained by the trust. If trust is not maintaining proper books of accounts or records, the cancellation procedure can be initiated. There is a latest notification number 94/22. You all must be aware. It is 10th August 22. 10th August 22. The books of accounts are being prescribed, and more than 3.5 page notification is there. What document, what manner, and what records to be maintained by the trust, that we will see at the end. My 2-3 slides I have kept, and certain questions and certain discussion will require on that issues. CIT has to satisfy himself about the genuineness of the activity, may grant or reject the renewal, has to pass a speaking order within 6 months. The aggrieved party can file appeal into ITAT against the order. That is also the provision is there. Otherwise, also it is permitted to file an appeal for any rejection of the registration order. So these are the provisions are added in the rules for cancellation. Now that we'll see, I'll be covering cancellation in further details. There is one more provision has been brought in. There's a new system they have been adopted, and that is adopted from assessment year 22-23, which date is already gone, and all have filed that annual statement of donation. That is Form 10BD was prescribed, wherein every trust has to file Form that is Form 10BD by 31st of May every year. So this year also the date for financial year 21-22 was there to file the Form 10BD. The 10BD is the annual statement of donations received by the trust having ATG certificate and approval under Section 35. Means where the deductions under 35(1), 2, 1, 3, 35, 1, 1 is there, or ATG. So if that claim under that section, you want to claim that, then that form 10BD, all the details of donations are to be added. There was a lot of problem in filing 10BD because there are so many trusts getting small donation. In one of my own client have got 3,000 entries of the donation. There are certain 400, 500 donations are there. There are some big trusts have got many branches and they get many lot of donation. But there is no any threshold limit. Earlier there was a limit for ATG for 250 rupees. That's a small amount. That is also now it's not there. So thing is this, now they want all name, address, PAN number, Aadhaar number, if possible. Aadhaar number is not necessary, but PAN number is required to be filed in 10BD form. And form 10BE, a certificate of donation, is to be downloaded and given to the donor by 31st May. So after filing, you get like TDS certificates or TDS written when we file, then you get the TDS certificates and those can be claimed as a TDS. So same way it has been brought into that 10 from 10BE, but only one benefit is there. The trust has to file that donation receipt. So donation amount has been clearly established. The donor, when they get 10BE form, they are also satisfied that such information is already filed with the income tax department. The trust has done the required procedure and they got the certificate of donation with them. So that is very good procedure has been brought in. But there were certain problems. We faced it. But somehow with the time it went, people have filed it long there. And not only that, but the dates, if you see, to issue form 10BE is by 31st May and 10BD form also can be filed by 31st May. So that is not possible on the same day, because if you file a return, or I can call it a return, but it's form 10BD form, if you file on 31st of May, the downloading can be done only after 24 hours, this next day. So 1st June. So you have defaulted in that. I think this date should have been at least a week thereafter. Anyhow, this is the provision. If ASD means annual statement of donation, contains any mistake or there need any addition or deletion, updating of the information and correction statement can be filed. So there is no restriction in filing a correction statement. But question of penalties will arise, that we'll see. With this form, which is to be filed by every trust, there is no any limit, threshold limit. There is a late fee payable for the delay in filing of fund and BD or issuing certificate. Mandatory late fee of ₹200 per day. This was being a first year. Amendment brought thereafter. So many, all other procedures were extended for 1 year, but this form was not, the due dates were not extended. But they want everything as fast as possible. They want to digitalize it. There are many trusts who have missed these dates. We have tried in few cases. We were able to file revised 10BD, corrected statement, and new also. This corrected means the entries which were there earlier in form 10BD, if you file for those entries, that can be revised, or corrected statement can be filed. But any entry you have completely missed, then you have to file fresh 10BD and cover that. Now just last week only they have added 22-23. Up till last week it was not there for assessment year 22-23 because the donations which are received, then they are asking for 10BE form. We are unable to file it because it was not accepted. But now that they have realized and they have corrected that form submission, now assessment year, current year assessment year 23-24, this current year from financial year 22-23, you can file 10BD and take 10B form and give to the donors. Here I will advise who are practicing in the charitable trust, you decide quarterly or 6 monthly. At least 6 monthly you file one 10B return for the first 6 months, and then up to December, one will be in between, you can file, and then you can file before 31st of May. So in between, if you are filing, your burden will also come down. The donors will get timely 10B form, and it will be easy to proceed. So it is advisable that continuously you can file. There is one more penalty, that is section 271K has been added, that AO may levy penalty under section 271K, minimum of rupees 10,000 and maximum of rupees 1 lakh. For if he fails to deliver or cause to be delivered ASD form 10BD within the time prescribed. This is only for not filing a form 10. And that power is given to AO. So AO, when he comes to know that it is not filed in time or filed late, then we can see, and there is no any provision for reasonable cause. There is no provision for any whether he can drop on what basis or he has to levy. So only penalty provision has been brought in. Now time will tell how these penalties will be levied, but per day penalty is been there. We have filed revised returns without paying the penalties. Up till now, it was accepting. Now we have to see whether the provision says, in the rules it says, you first pay the penalty and then you can file. But presently it is accepting. I don't know whether there is a, and one more thing, you all will agree with me, still that new portal, IT portal, there are glitches. Still is going on. 143.1, you see this type of form 10BD or any other provision. Some you have filed form 10B along with the return, then also it is they are sending the notices. So there are still that glitches are going on. We are facing that problem. But teething trouble, now teething trouble more than 2 years have been passed, still teething trouble is going on. Let us go to the next point. Now, from assessment year 21-22, amendment in section 12AB has been brought in, that all the trusts which are falling under the audit under 10AB, because every trust which has got the gross receipts are more than 2.5 lakhs, not the net income. There is a confusion in many chartered accountants or many professionals that if net income is less than 2.5 lakhs, then audit is not required. No, it is with the gross, because the income definition under section 2E very clearly says the voluntary contribution and other income out of from the property of the trust is the income of the trust. So income is a gross receipt. According to me, the question arises whether corpus donation is to be taken or considered for the purpose of applicability of audit under 12AB or not. But the view is taken by many professionals, and according to me also, the corpus donation is first, it is income. Because it's a voluntary contribution. So with a specific direction. It is with a direction that's a general donation for the objects of the trust to be utilized for the objects of the trust. But it's an income. So while considering 2.5 lakhs, you should add the income for the corpus donations as well. If corpus donations and gross receipt, income and expenditure account or certain receipts, there are so many trusts are maintaining a specific funds account directly into balance sheet, and certain donations are credited to the those specific fund account and directly taken to the balance sheet. While computing, you take as income, and you should. It is taxable. It's the income of the year. Now that is to be considered while considering this 2.5 lakhs. So audit is applicable where the receipts are more than 2.5 lakhs, and audit report is to be filed as provided in section 44AB of income tax. 44AB says for the tax audit, it is to be filed 30 days prior to the due date of filing of the return. So here the audit case, the due date of filing of return is 31st October. Then the audit report is to be filed by 30th September. That is from 21-22. Already 2 assessments are gone. Now also we are working on the audits. But only thing is, earlier there was no requirement of filing of audited accounts along with the audit. And even ITR also there was no requirement of attaching the audited accounts. Only the requirement was that you have to file or fill up those figures of income, expenditure and balance sheet figures. Still, 22-20 the same thing is there, but with Form 10B, the audit report is to be filed for Section 12A registered trust for Form 10B, and 1023C it is 10BB. And the audit report is required to be filed 1 month prior to the due date of filing of return. So in every year it is 30th September. So you have to file that audit report before 30th September. And along with the, you cannot upload Form 10B if there are no accounts attached. Now indirectly they have covered attaching of accounts. Because ITR 7, there is no provision. So here they brought it that in the system, there is nothing is mentioned in the rules. Act also doesn't require. There is no provision. But in the system, unless you attach those audited accounts, the Form 10B doesn't go. So by 30th September, you have to attach audited account along with the audit report. Now question arises, whether accounts are required for the purpose of audit report, checking the audit report, or accounts are required for the assessment of the trust. So it should be along with the income tax return rather than along with the audit report. But this is the provision they have just brought in. As per 44AB, it is to be attached. Anyhow, there is another amendment was that a corpus donation by one trust. If the corpus donation is given by one trust having 12A registration, donating to the another trust, that will not be allowed as an application of income by the donor trust. Now, I think we should go a little fast. That is not allowed. It will not be allowed as an application of income. So that donor trust will not get application of income. The said existing provision is now further extended to trust having exemption 1023C. Earlier it was only to 12A registration. Now they realized that 1023C was missed, so that they have added. Now 80GGA, there is an amendment which is really, why I want to say that is, okay, now the limit under section 10GGA, that donation under section 80GGA is now, if it is paid in cash, it reduced to 2,000 from 10,000 rupees. The same provision is already for the donations made under 80G. So for claiming 80G, if 2,000 rupees paid in cash or more, then 80G will not be available. So it is misunderstood in so many charitable trusts that they cannot receive the donation more than 2,000 rupees. So I want to clear that misconception that no, it is only for claiming 80G. It is the limit has been brought from 10,000 to 2,000 rupees for donation made in cash. But donations can be accepted more than 2,000 rupees. The donor will not get eligible. The donee trust will get that exemption. Will get that donation. Now, in this case, there are, I have pointed out, there are some uncertainties, issues and difficulties and contradiction in the new amended provisions. I think this is very interesting, and wherein if any questions are to be asked, I can answer at this stage or at the end, I don't mind. The date of application of provisional registration is such that no trust will get registration in the first year of its existence. there is contradiction between existing section 12A2, which says the registration is to be granted from financial year in which it is applied. The act says 12A2, the year in which you apply. But rule says, but section 12AB says, now 12AB is also act. Rule also says that provisional registration will be granted in the case of first year of the trust. It will be allowed from next assessment year. Means 1 month prior to the previous year of the assessment year for which the registration is out. So there is a contradiction between 12A2 and 12AB. What trust is required to prove for getting provisional registration? I think our experience is that we have not to prove anything. Only thing is it's a public charitable trust. The provisions are charitable. Trust deed is there. Identity of the trustee should be there. And permanent account number is granted. The trust deed is registered where there is a local act of section 8 incorporation certificate, or if there is a registrar of societies, registrar of societies, registration of the society registration, or local authority, Maharashtra is Maharashtra Public Trust Act, or where there is no local act, though that trust deed is which is registered as a document with the registrar of assurance. You attach that, you get the provisional registration. So this is what is experience we have got it. What will happen if not applied in time for re-registration or file date? These many trusts have missed the date of 31st March 2022 for re-registration of their existing 12 registration. And I have come to know from CIT Mumbai that so many applications and inquiry they are getting, whether there is a provision for condonation or delay, whether they can apply now or can get it. And those applications, there are hundreds of people who have missed their hundreds have come to my knowledge. There may be more than so many trusts who have missed those days. But as per the law and provision, if you have missed the date, your registration was valid up to 21. Now that trust is got no registration. That certificate is of no use if you have not applied for re-registration. So this is my view, and there is a movement. Representation have been made. I will seek the other association of South India that they also represent. They give some condonation or they allow certain time or period that they should be that re-registration should be granted. But one way, the date was extended for nearly 1 year. Even after extension of 1 year, if they are not applying in time, and it was not very hard, only Form 10A was to be filed along with the certified copies of the registration. Then if you do not follow the law and rules, then you have to face the problem. Or if you have filed late, for filing late, it was not accepting. The system was not accepting the form to be filed. Or if you file, then you get from the year as per the provisional registration. Re-registration, the date is gone. Now, the Commissionerate Office has also recommended on our request. Because if internally also they get the representation, okay, these are the people are facing this problem, please consider. So CBDT, they have forwarded that so many applications are coming, and please consider it and take proper decision. But as of now, the people who has missed the date has no registration. So now they have a opportunity what they have nothing is left other than apply for the again provisional registration and immediately apply for the renewal of registration. And gone, you have to go through all the procedure for getting as if a new registration. So that's what is, if you have missed the date, these are the consequences. What are the consequences if after provisional registration, the trust missed the date to apply for regular registration or delayed in filing the registration? That is in case of old trust and new trust. If there is a old trust which with the same consequences which I said for not filing re-registration, the same consequences will be there, that they have lost that provisional registration. You have to apply again for provisional registration and then go for re-registration or renewal of regular registration for 5 years. So if they have missed that date, now date is what? 6 months prior to the expiry of period, that is 2.5 years, because provisional is for 3 years, or within 6 months from the date of commencement of activity. So if it is old trust activities are going on, they should file immediately after getting the provisional registration for regular registration. That can be considered within 6 months. And wherever there is no activity has been commenced for a longer period, then accordingly they should file later on as per the provisions. Now, question arises here is, what constitute commencement of activities? Whether obtaining PAN number is considered as a opening bank account is considered as a start of activities. Receiving donation is considered commencement of activities. So there is no any clarification about the commencement of activities. So because it is says within 6 months from the date of commencement of activities, and there must be clarity for commencement of activities. See, according to my opinion or my submission, a trust is formed for charitable activities. Donation is income. That according to me is not commencement of activities. When you start utilizing that money or start your activities to fulfill the objects of the trust, that should be considered as commencement of activities. There might be problem only in donation receipt and activities, but other things means opening up bank account because settlement amount is there, or getting PAN number or any other such license or permission, that is not a start of activities. If the trust is in the field of awareness, so if they have started awareness, then that can be start of activities. So it will be different from case to case. What will be the commencement of activities? But basically, according to me, when it's activities, the trust for which it is formed, the objects of the trust, if it is formed for a particular object or what are the objects, then it is. If those objects is fulfilling of those objects, you start activity, there is a commencement. The same way, if the application for renewal is filed late, if you file renewal application late, then I think now one more information I got from the department that the renewal application and all these applications where the verification of the documents are to be done, or where a decision is to be taken by the authorities whether to grant or reduce or renew or regular registration is granted, has been against internally shifted to CIT exemption. Because you have to apply to the commissioner of your jurisdiction, and as per earlier old system, they will go through, they will call for, they will send the notices, and they will grant you or reject it. Now it is with the CIT, regular CIT. So CIT can say you have not filed the renewal application in time, so it is rejected. He can say, he can reject, because it says you have to apply at least 6 months prior to the end of the period. So after 4.5 years. So if you do not apply in that time, because there is a time limit prescribed for the CIT to grant or reject, that is 6 months. So before the expiry date, say for 31st March 27 or 26, it will be 5 years. Assessment year 26, 27. So March 26. So if you have not applied with September 25, then he gets only 6 months for grant to you, and there will be continuity of your registration. There will not be a single day gap, because your earlier registration is expiring on 31st March 2026, and it will be renewed from that date. So he has to pass a speaking order within 6 months. So that 6 month time is given to the commissioner to pass. So if you are not filing, he may condone. There is no law, or there is no any circular, or there is no any clarification, because the new rules. Now we'll have to see that the position will arise after 4.5 years or 4 years. So according to me, he may reject. So be careful. Why to wait for 6 months? You apply during the that financial year itself, beginning. Then what are the consequences if the application for the registration is not filed in time? That we have said he may reject the application. What constitute commencement of that we have seen. Now, if the trust has already started activities, then that we have, I have explained that he has to file immediately for renewal. They should not wait for the 6 months to get over. Or if the trust has got provisional registration, and immediately within a week's time or 15 days, they start the activities. So count those 6 month period from that date. So it is within 6 months from the date of commencement of activities. So Finance Act 21, there are very important amendments have been brought in. This is 20, which has gone by. I think many were knowing all about it. Finance Act 21 is a section 11(1)(d). Corpus donations has been amended from assessment year 22-23. The income in the form of voluntary contribution made by a specific direction, that shall form part of the corpus that we know, and that will be corpus donation, and will be allowed as a exemption under 11(1)(d). And that contribution subject to the condition that such voluntary contributions are invested or deposited in one or more or forms or mode specified in 11(5). So that corpus donations are to be invested in 11(5) mode. So bank balance is also considered, deposit in the bank account is also considered as 11(5), or fixed deposit or mutual fund, permitted mutual fund, or any government bonds or any permitted 11(5) modes. You have to invest that corpus money into the specified modes and maintain specifically for such corpus. Means that investment is required to be maintained specifically for that purpose. So this amendment has been brought with one more rider, that corpus donation with a specific direction, that it will form part of the corpus fund of the trust. I think here also I have to say something. A specific direction that itself form part of the corpus fund of the trust. Many people are considering whether that is specific direction, there is a specific direction for a specific purpose. Say if somebody has donated 1 lakh rupees for the purpose of prizes to be given for the 10th standard students who achieve the maximum marks in the school. And if that donation is given with a specific direction, but there is no mention that it will form part of the corpus. So there is a difference according to me. You may not agree or agree. My saying is that corpus donations means the capital receipt of the organization. It is to be mentioned clearly that it is for the purpose of corpus fund of the trust, not a specific fund. Specific funds are also in the balance sheet. There are so many judgments, it is to be considered that. But my view in this case is the difference between both are, I'll just tell you that the corpus is written specifically for the corpus of the trust. They are written for this purpose, specific purpose. There is written direction. But there the direction is not for corpus, for a specific fund. Building fund, education fund, prize distribution, X, Y, Z. And according to me, the income of the corpus fund is to be utilized for the objects of the trust. So you have to invest in 11.5. Whatever income comes from that investment are to be utilized for the objects of the trust. And there, the donation itself, the principal amount, as well as interest, are to be utilized for that specific purpose or a specific direction. So the difference between two are there the principal also can be utilized. Here only interest is to be utilized for the objects of the trust. This is my experience, my understanding about the difference between the specific fund and the corpus fund. But now if you spend the corpus fund, now the amendment, another amendment is that it will not be treated as a application of income. Explanation 2 is added with 11.1d. If corpus fund is utilized as application of income in any previous year, then that application of income will not be allowed as a deduction being application of that year. So if you have utilized the corpus donation for application of income, which was earlier allowed, so you get 11.1d, you are getting application of income as well. There were double deduction that government has realized after so many years. And then they have brought this provision that it will not be allowed as a application of income of that year. There is now a provision has been granted that explanation 4 is also added. Explanation 2 and explanation 4 to 11.1 has been inserted with AY 22-23, wherein it says explanation 4 for the purpose of determining the amount of application under clause A and clause B. That is, corpus donations will not be treated as application of income. Application for charitable or religious purposes from the corpus as referred in clause D, that is 11.d of this subsection shall not be treated as application of income for charitable or religious purposes, that we have seen, provided one proviso is there in explanation 4. That says application, that proviso says that provided that amount not so treated as application or part thereof, means the corpus amount which is utilized and for the objects of the trust amount, and application is not allowed in that year. However, if that amount not so treated as application of income or part thereof shall be treated as application of income for charitable or religious purposes in the previous year in which the amount or part thereof is invested or deposited into the bank. 11.5 mode and maintained specifically for such corpus. See, the word is from such corpus. Explanation 4 says maintained specifically for such corpus from the income of that year to the extent of investment. But disallowance is 2 lakhs. Corpus rupees 2 lakhs we have received, you have utilized for the some project, and so that 2 lakhs will not be allowed to you as application of income in say financial year 22-23. But in 23-24, 1 lakh rupees out of the income of that year, if you have invested in 11.5 and specifically mentioned that it is a redeposit of replenishment of that earlier disallowance of application. So that 1 lakh rupees, that is part of the corpus donation which was not allowed, will be allowed as an application of income in that year. Or if 2 lakhs you put, then the whole amount. If part of that you use or invest, then that allowed amount will be allowed as a corpus. So for that, I have written this one example here, which will clarify this. That corpus from the year of the application, that corpus heading is okay. This illustration that year 1, year 2, and year 2 alternate. With 2 different situations are given in year 2. The corpus donation is received a 50 year nil, second nil. Non-corpus donation is received 100, 200, then alternate year also 200. Mandatory 85%, as for 11, you have to spend 85%. Now 1023 C also from SS 22 budget, it's all aligned 1023 C and section 11 conditions and provisions. 85 is to be utilized here. 85% is 170 actual application. Suppose in the year 1 actual application is done 135, year 2 is done 120, and alternately is also same 120. Here, if you see 85 was to be utilized, 135 utilized, the excess application is 50. So excess application of 50 rupees as per new amendment 22 will not be allowed as a, the deficit will not be allowed to be adjusted against the future income. So your application will be only considered as 85 and your income excess short application will be nil. Because here that 50 and 150, you have utilized 135, means there is some amount of corpus is also utilized. And there is a 50 rupees excess or short. It is excess. 85 was to be used and you have spent 135. So application will be restricted to 85. Now coming to year 2. In year 2, if my application is done 120, my excess application is 50 rupees. Means my mandatory, shortfall is 50, not excess. Bracket is shortfall. I had to apply 170. I spent 120. There is a shortage of 50. My actual application is 120. My shortage is 50. Means my shortage is 50. Means that 50 is the income of that trust. You can go for accumulation provisions, whether for the next year 9A or for 5 years for 10, and make the income nil or less than 2,50,000, or pay the tax accordingly. So this year 2 is that. But year 2 alternatively, as per this new provisions of corpus which is reinvested, we'll see what is the situation. Their non-corpus donations 2 lakh, 170, 120, the same figure, but that 50 excess, there is an income, but that 50 corpus donation of first year, which you have utilized in that year, now that if you have reinvested in the second year alternatively, that in the 11.5 mode and specifically represented in the balance sheet, that is 11.5 replenishment of the previous year's application of income. So that will be allowed application of income of current year. So 50 minus 50. So your application 170 has been done and your income is nil. So this is an example to clarify that that the corpus how it is to be. So every trust has to keep its record. If the corpus donation, it is advisable not to use the corpus. That's an ideal situation. Because that day I have said that under secretary and joint secretary has said the trust capital should be reflected in the balance sheet. So it is not always that. That's an ideal situation if your capital is intact. Or you can invest more than your capital because it's an old trust, then 15% accumulation is so much of corpus earlier allowed, and that is invested. But new trust, it is very difficult for them to maintain. If there is a investment in the properties, if the school, then construction of a school, if it is hospital, then construction of hospital, or any other activities, you need some immovable properties or movable assets. Then what? Then in that case, even immovable property is covered for 11.5. But mind it, movable properties are not covered. That we will see later. There is one issue for that. Now, explanation 4 continue. Application for charitable purposes, if it is done out of both, that was corpus. The second part they have covered is amount spent out of loans and borrowings. So where out of loans and borrowings, if the amount utilized as application of income out of borrowed fund, then it will not be treated as application of income. I think this was earlier also, it was disallowed. But now specifically they have brought in, because the second part says that if it will be allowed in the year in which the loan is repaid, the borrowed fund is repaid. The borrowed fund can be from bank, from the private, or whatever it may be. Where there is a local authority, here in Maharashtra, in Bombay, we have to obtain prior permission from the Charity Commissioner office for borrowing the funds. There is a strict procedure and law to borrow the fund is spent. Where there is no local authority, you can borrow and spend. But if you spend out of borrowed fund, application of income will not be allowed, and it will be allowed the year in which you repay the loan. Simple. So for the same corpus, and it has been brought at the same line, it will not be allowed if it is applied. It is allowed the year in which it is either reinvested or repaid. Application of income in the year to the extent it is repaid. It may not be repaid fully. Now there is an explanation 5 is also added. This is something which I feel reversing of apex court decision. Earlier, various high courts, various tribunals have given the judgment. There is no provision for the Charitable Trust Act, Charitable Trust system of taxation, that deficit or excess spending will be carried forward. But excess spending, because of the commercial nature of accounting, is to be prepared, and some to recouping from the future year's income. So many high courts have given this judgment that deficit of any particular year can be adjusted against the future income of the trust. But department was not accepting this situation, and they filed an SLP into Supreme Court in the case of Subro's Education Society, and they were not allowing that deficit. People were claiming, but it was not allowed. They were facing appeal and all those things. So many litigation was going on in that case. Finally, in the year, I think 2018, Supreme Court dismissed that SLP of the department in the Subro's Education Society case, and that become the final judgment and become law of the land, and the deficit excess spending was allowed as a deduction in the year 2021 and 21-22. But from assessment year 22-23, they have reversed that decision by bringing adding explanation 5 to section 11(1)(a). Now, no deficit will be allowed of any earlier year from assessment year 22-23 and current year's income and your excess spending. If you have done excess spending, that is for that year, that's all. Matter over. Here, sometimes you feel that in certain genuine cases, this deficit, or there may be some provision that deficit can be claimed in next 3 years, like business in 8 years. So here also 3 years or 5 years they can give, because it is for charity. If the money is spent for any project, now COVID, there are so many people who have spent more than what they were having, their borrowing and all that, and they spent so much of money. Now, if they have started some, there are so many times I've seen that they have started their kitchen for giving food to morning and evening, or any other time. So they were stuck with the money because donations were not coming because of lockdown and all this thing. They went on putting their money, and all money were spent for the trust. So in such cases, it is to be considered. Anyhow, the provision is that now deficit will not be allowed, and it will not be carried forward, or there was no carried forward procedure. But my simple my perception is that if you are reversing a Supreme Court judgment, that as SLP was lying in Supreme Court for many years, a case went to Supreme Court must have taken at least 10 to 15 years. So litigation of 15 to 20 years have been reversed by a simple one explanation added to 11.1. Even they had no guts to bring it as separate section, like depreciation, they have brought in separate 11.6 depreciation. That depreciation will not be allowed for the assets which are not utilized as application of income, which are used for application of income. Depreciation on their assets will not be allowed. So my saying is that okay, purpose is served, what they wanted they did. Now, amendment in section 1023C, clause 3AD, 3AE, wherein any education institution or hospital, if they are gross receipts, earlier the provision was there, if their gross receipts from that, those solely for education and solely for medical, if it is a mixed, then 3AD and AE was not allowed. So the limit was there for a prescribed limit of 1 crore, which has been now increased to 5 crore. If their gross receipts are less than 5 crore, then they are entitled directly to claim 3AD for 3AB for education and 3AD and AE for hospital. Those or all wherever the limits are there. So it is 1 crore to 5 crore. The only difference in this amendment is that I just want to bring to the notice of the participants that earlier this 1 crore was to be calculated as per the wordings of the section for per project. If some school is having, some trust is having 3 schools at different places, and the gross receipt of each school was less than 1 crore, so they were getting 1023C or 3AD. AB is for more than 50% government grants. So now that is increased to 5 crore, but it is now become co-op trust instead of co-op activity. Means if the trust, whether any number of activities, if their gross receipts are less than 5 crore from solely educational institutions, then they can claim 1023C 3AD. Now in Finance Act 22. I think I'm approaching the end, but my 22 Act is still pending because of the delay in the beginning. If organization allowed some more time, I don't mind to continue. There are changes in Finance Act 22. Number one, main is there are two regimes. One regime is 1023C, another regime is Section 11. In charitable trust, taxation provisions are by 2 parts. So they have tried to align as much as possible the provisions of both the regimes. That is the one object, one purpose for which, and these purpose are being narrated by that Under Secretary and Joint Secretary in the joint meeting, which was held few days before. Second was providing clarity in the section in the case of violation. So they say that they have brought clarity in bringing that specified violation definition they have got, there is a clarity and effective monitoring. All other amendments they have brought in what is effective, they want to monitor effectively. Means they agree that earlier it was not monitor effective. We can say that way, we can think that way. Now, changes in Finance Act 22 providing clarity in succession, what they say is violation of different provisions. There are violations in different provisions. Taxing certain specified income at the rate of 30%. So they brought new section 115 BBI, where are certain specified income. If there is a taxing of there are violation, then you have to pay tax on that particular income, 30%. Another is registration to continue and taxing net income under section 13, 10, 11 and 22nd and 23rd proviso to section 10. They have added 13, 10, 13, 11 and 22nd and 23rd proviso that we see later of section 10. Then the registration to be cancelled in a specified violation under section 12AB, 4 and 5 or under 15 provisos of 1023C. So they have aligned almost all the provisions between these two regimes, and they have amended all these provisions. We'll see in further details. Exemption to the trust or institution is available in the two regime, 1023C and 12A I have seen. Amendment in section 11.2. 1023, the income by 1023C and 2. See, there was lacuna in the wordings of the section of where the year in which it is to be taxed under 11.2. The wordings are such that the next previous year where the period of accumulation expires will be taxed in that year. Means it was to be taxed in the 6th year. Means if you are claiming in section 11 deduction and you have accumulated income 11.2, 11.2 says you can accumulate any amount of fund for the specific purpose. There is a procedure form 10 is to be filed before the due date of filing of return, and that money is invested in 11.5 modes, and from there that can be utilized in the 5 years. If it is not utilized in the 5 years or not utilized the purpose for which accumulated or not kept in 11.5 investments, then it will be taxed in the year in which such thing happened or in the 6th year. If other defaults are not there, then 5 year periods are over, then it will be taxed in the 6th year. So that has been corrected. Now that 6th year wordings have been changed, now it is to be utilized in 5th year. So 1023C also there is a proviso, third proviso, which was saying that the amount accumulated more than 15% by a organization having approval under 1023C. Having approval means subsection 4, 5, 6, 6A. Then in that case, that money is to be utilized for the purpose for which that institution is set up. So there was strictly 5 years provisions were given. So if you do not spend that money for the purpose for which the institution is set up, then it is to be taxed in the 5th year. Now that is aligned that now 11.2 also is to be spent in 5 years with other conditions. Otherwise, it will be taxed in the 5 years. So that is one important provision. Utilization of accumulation fund to be spent in 5 years, not in the 6th year. That is with effect from assessment year 23-24. Now that earlier provision is applicable up to 22-23. So the accumulation which is done every year in certain cases, a certain big trust, there are regular accumulation every year. So every year, that 6th year, it was to be spent, and then new accumulation, then it is to be spent. That cycle was going. Now that, as per earlier provision, it is to be spent in 6th year. Now, new provision, it says it is to be spent in 5 years. So there is some confusion how that 5 years and 6 years during the transitional period, how it is to be kept. So according to me and various other professionals here, I think you all will agree with that during this financial year, means financial year 22-23, means 23-34, the earlier period 6th year and for the 5th year, both the years accumulation are to be spent in 1 year to fulfill both the conditions, means both the years provisions. So in 1 year you have to spend for earlier 6th year and then 5th year. So it is to be that is the only thing I want to bring to the notice, that taxing of unutilized accumulation, which is not specified to be taxed in the 5th year, and the 6th year is also there. One more thing has been added in 1023C. Earlier, there was no any provision or there was no any requirement for filing any form for that accumulation, automatic accumulation under third proviso to 1023C. So that third proviso was very clearly saying is spending more than accumulating more than 15% is to be spent in 5 years. So that record of that excess spending was to be maintained by the organization, and it is to be filed in the ITR that this is excess, and when there is an audit report 10 BB is to be filed. So that auditor also had to give that figure of amount in excess of accumulation in excess of 15%. So 15% provision is applicable to 1023 provisions as well, income also. So in that case, now that one form, they said in the provision, the specific form will be prescribed in due course, that 1023 trust has also to form that form to accumulate that above 15% accumulation. So they want to bring into the procedure aligning with the section 11.2. That 11.2 earlier was the form 10. Now in the last month only, they have prescribed the form 10 itself. The same 10 form has been modified to cover the accumulation under 1023C, and that form is to be filed before the filing of return, and before the due date of filing of return, and that form is to be filed. So there is now prescribed form 10, whether 1020. Now you cannot claim both the exemption together. Earlier it was allowed. So if you cannot claim both the exemption for 1023C, you fill those columns and fill. And there is the same provision. You have to keep the money in 11.5. Any surplus money by the trust is to be invested in 11.5. In any case, it is to be invested in 11.5. And 11.2 is also the same. So that form 10, if it is 11.2 or 10 third proviso 1023C, you have to fill the proper column, the respective columns, and file that form. So now that prescribed form is also for 1023C has come into statute. Now there is one more amendment, which is really to some extent.
Sir, sorry to interrupt. Sir, how long will it continue, sir?
I think 10 to 15 minutes.
Okay, sir. Just for it.
Let
No
me
problem,
recoup
sir. Yeah.
Let me recoup the delay. Participants are agreeing.
No problem, sir. Participants is okay with that. Just asking you that will it go for next 20 minutes. Thank you, sir.
Yes, yes. Yeah,
Because
I
we have
don't
some
mind.
questions also to be taken. That is what just to consider.
Beg your pardon?
We have some questions also, so some 10 to 20 questions. Yeah,
Okay.
that's
Oh, okay. Then I'll cover it fast. Now the irrespective of the application of income is to be allowed on payment basis. Earlier, it was allowed as a system of accounting followed by the trust. Now, irrespective of whatever system of accounting is followed by the trust, the application of income will be allowed on the basis of payment basis. Means whatever money is spent will be allowed as application of income of that year. So originally, when the budget was submitted, presented, this provision was to be applicable from assessment year 22-23. And at that time already that March, February was there, then March, and then the budget would have been passed in May. Generally, it is passed in May month. So they realized that the year of applicability of this provision is not correct. And there were representation were sent that it should be done from the next year. At least it should not be there. If you want to continue, it is from the next year. So while passing the budget, that assessment year 22-23 is changed to assessment year 23-24. So from this current year, it will be allowed on the basis of payment basis. However, if Section 8 companies compulsory to maintain mercantile basis system of accounting, even other trusts who are regularly maintaining their accounts on mercantile system of basis, so they have to make the add back calculation while computing the taxable income of the trust like business. We disallow depreciation as per other law and as per Income Tax Act and other so many things, TDS and all those things also can be is to be done here in the case of charitable trust. Now, thing is this, that in this matter, income, if it is mercantile system of income following, the income is to be taken on mercantile system basis. And in other way also, because now there is a very strict checking for 26 AS information available and AIR. You have to verify and tally those informations which has been given to the income tax for the different provisions, and that we have to reconcile that income is shown or not. So you continue to show the income. If your cash system of accounting you are following, then there is no problem. In any case, paid only was claimed as application, but where the mercantile system of accounting, and most of the trusts are following mercantile system. So now it will be allowed as a payment basis. So whatever amount is paid, provisions are to be disallowed. One more problem I realized from so many schools and so many other big organizations, they make the provision or set apart some money for gratuity payment to the employees. It may be approved, it may not be approved. But those, even the passing of those entries or those payable amount, whether gratuity or whether any other professional fees or audit fees, also always it is provision. After audit also they don't pay in time. Whether they will pay before March, will never pay. So those will be disallowed in current year. But in next year, it will be allowed those payments, and next year's provision will not be allowed. So that cycle will continue. So it will be in the 1 year, there will be some impact on the taxation or but at the same time, every trust is entitled for accumulation. That explanation 2 to 11(1) you can spend in the next year or the year of receipt of the income. So 9A form is to be filed. And 9A, there is no any condition attached. 11(5) investment. In any case, any fund is to be kept in the bank account or 11(5). So there, you have to 9A. You can file and pay, spend in the next year. That can be done if the disallowance item is a bigger one. Or you continue with that computation, and if it is a 1023 company, as such your total income is exempted. So there is no problem in 1023C. Where is section 11 you are claiming you have a accumulation either 11(2) for 5 years specific purpose or 9A for the spending the next year or the year in which you received the money. So that can be managed. but that impact will be there in 1 year. And now the computation is to be done for us, by us, for every trust on the basis of payment. Now, cancellation of registration or approval in certain circumstances. So before the amendment provision was there are some two regimes, automated manner was granted in certain cases. Non-genuine trust or institution do not get the exemption provision, and propose amendment to section 12AB4 and 5, which we have seen earlier, 12AB4, where the registration of provisional registration has been granted. In such cases, in the very simple, they have brought it, not simple, they say it is clarificatory. Occurrence of one or more specified violation during the previous years. For cancellation, they have to see this situation or circumstances wherein CIT can cancel the registration, or PCCIT wherever the authority is granted. So occurrence of one or more specified violation has received a reference from the assessing officer. Now there is a new system has been introduced. That assessing officer, if he comes to know any violation, there is amendment is 143.3, that in case of charitable trust having 12-year registration, if assessing officer finds any violation in a specified violation or any other situations wherein the cancellation of registration can be evoked, so assessing officer has to give a reference to the CIT that this is a situation and he is proposing for cancellation of registration. Now the cancellation decision is to be taken, whether it is a violation falling under the provisions or not, whether it is correct or not. That is the decision is to be taken by CIT. Assessing officer has to just give the reference. With that reference, CIT will go for inquiry and check with that. If he finds there is a violation, he will reject the cancel the registration. Then you can go for appeal, and all those things are different. But that provision for reference has been brought in, and the wording used in the provision section is that assessing officer has to submit the reference. It is he cannot decide. No. It's okay. Now I will not, for any reason, I will not give that. So he has to give that reference. Otherwise, that during the revenue audit, he will be in trouble. Anyhow, so this has been brought into the provision, and one more 143.3. There is one more amendment that further it further says that the assessment for that year, he has to give effect of the CIT's decision in that assessment. So the time barring period will not be counted for that period for which the CIT is taking time to take that decision, with again for the purpose of that reference. Means that time barring period will be extended to that extent, and then assessing officer has to give effect to that CIT's order, whether he is rejecting or whether he is cancelling. Means rejecting the reference, means continuing the registration, or cancelling the registration. That assessing officer has to give the effect in the assessment of and pass order accordingly. So such selection, then there is a assessing officer has to give the reference. Then third is such case where has been selected in accordance with the risk management strategy formulated by the board from time to time. This is a new one more hierarchy, or what I call. They can decide that this is risk management strategy. In certain cases, they will come with that. There may be selected cases, they will take the scrutiny under risk management strategy that they will formulate, and they will decide how they will do it and what cases they will take it for cancellation if there is they have found that defaults or it's not proper. So the principal commissioner or commissioner shall call for such documents or information and inquiry and pass an order either cancelling or continuing the provisions. So now the occurrence of specified violations, we'll see. And pass an order in writing refusing the case is not satisfied with the occurrence of one or more specified violations, or forward a copy to, then the order is to be preserved. Now, what is specified violation? Now, I go a little further. They have said if the money is applied for objects, means other than objects. So this specified violation is very important to note. Please see that every trust spends its money only to the objects of the trust, even if that spending is charitable. If it is not in the objects of the trust, then the registration can be cancelled. Procedure can be initiated. So where any income of the trust or institution has been applied other than for the objects for which it is established. So this is something which every trust, their professional auditor, consultant has to keep in mind, that all the spending are for the objects of the trust. The trust where there is a business, it should be incidental. If it is not incidental, then he can cancel. Separate books of accounts are to be maintained. Now, separate books of accounts to be maintained, no separate ledger account. There are certain nature of business has been conducted which are incidental, but they are not maintaining separate books of. Now, separate books of account means separate bank account, separate receipts, separate expenses, separate balance sheet, separate income expenditure, profit and loss account of that, whatever the manner in which they prepare. So those are called the separate books of accounts. So those separate books of accounts are to be maintained for 11.4 and 4A says. Has applied any part of income from the property held under the trust for the private religious purposes. They cannot spend for which is not public, that we have seen earlier as well. The trust applied part of income for the benefit of particular religious community or class. So there also some issues are there. If the trust or institution applies its income, any part of income, any part, and it's not that what part. There is no percentage, 10%, 20% or 5%. No, a part for the benefit of any particular religious community or caste. So if the amount is spent by the trust for any particular religious community or part, then they can cancel the registration. It is coming under a specified violation. Now there are certain minority schools and minority status has been given, and the money is spent for that minority caste and that. So there will be issues for those trusts. We have to see that it is not particular religious community. It should not. The word is in you have to see that religious community or caste. Any activity which is not genuine or is not carried on in accordance with the conditions subject to which it was registered. So the conditions which are mentioned in the registration, now that registration is 10 AC. For ATG is also 10 AC. So whatever the conditions are mentioned in that 10 AC, if it is not followed, not complied with the, not those conditions are not followed by the trust, then registration can be, proceeding can be initiated for cancellation of registration. It's a specified violation. Now, we have seen in 10 AC what happened. The people who have applied for re-registration up to May, they have been issued this 10 AC form with the heading order for provisional registration. And the section and clause is written correctly, and the year is written 5 years correctly. And the conditions were so long, conditions were added, out of which 4 to 5 conditions were out of the income tax law and provisions, rules and regulations. So such conditions they decided and put into the order. I don't know whether DGIT or with committee or who have had taken the decision, and this thing was going on for a few months, and there were so many representations to the CVDT and everywhere, because the problem was with the donors. If you submit to them your provisional registration, then they are not inclined to donate on the provisional basis. And why provisional? It is a law says it's an order of registration. Then CBDT has issued a circular. I don't remember the circular number. Is circular number Suche? So that circular says those orders which are given for correctly for 5 years and correctly in the number, provisional order is to be read order for registration. So that they have clarified. Then all the 4 situations, re-registration, ATG, provisional registration, provisional ATG. For the 4 situations, the conditions have been changed completely. All those conditions were deleted from the registration certificate, and only those important laws, old type the conditions are there. Now those conditions which were beyond the act and rules are being removed from that, and that circular becomes very important circular. And circular kayo che? Then now my advice is every trust should keep, whether it is order of provisional or order of registration, because of the condition they have to keep that circular attached with the whole registration for the next 5 years, 4.5 years. And wherever there is a provisional is mentioned, they have to keep with them that circular and add with the certificate to issue to anybody, and to clarify that now it is not applicable. So those conditions have been changed. So conditions subject to which it is registration, if it is not following, then new conditions given by the CBDT is to be considered. Then there is a complied with any other law, which we have seen earlier, that it is occurred and not disputed or attained finality. So these are the specified violations. There is a time limit for passing the cancellation order. They have given expiry a period of 6 months from the end of the quarter. See here they have given end of the quarter, means quarterly. 6 months within 6 months from the end of the quarter. They have initiated in with whatever quarter. So the January, February, March. So 6 months thereafter. Yeah, April, May, June. Then 6 months thereafter. So that is new date is to be remembered. AO shall send the reference that we have seen in detail. Then the reference to the principal is to be approved and registration as the case. No order for making assessment. Oh, that that period of limitations will be extended to that extent. We have seen that. Now, clarification on computation of income in case of denial of, this is a good provision brought in, section 1310 has been brought in, wherein is for certain defaults or violations, proviso to section 215, or in case of not getting accounts audited or not filed return in accordance with any provision of 139(4)(a). So in these circumstances, if the exemption is denied, then the whole, earlier what happened, the gross income was taxed. No expenses were allowed, whether establishment expenses, whether amount spent on the object of the trust, which was not allowed. Now that has been brought that in such cases, expenses will be allowed with the fulfillment of certain conditions. At least they have brought in that amount which is spent on the objects of the trust, amount which is spent for the purpose of establishment expenses or running the trust will be allowed as a deduction. Only few adjustments are to be done, or it is not allowed, like from corpus credit of such trust or institution, money is spent out of corpus. If money is spent out of loans and borrowings, claim of depreciation, if it is not allowable, means the property has been claimed as a capital expenditure application in earlier, will not be allowed. And from the contribution to donation of any person, means if the money is spent out of the, means the expenses are for the donation to another trust. If amount donated to another trust is also to be, is also a application of income. So that that in these conditions will be added back. And 40A1A, 40A3, 40A3A, no expenditure of set off of the loss of earlier year, no deduction in respect of expenditure allowed set off or loss allowed in earlier or other provision of the act. So thing is this, these are the certain will not be allowed, otherwise other expenses will be allowed, and accordingly that income will be taxed. So it's a good provision, welcome provision. Now the genuine expenses which is incurred by the trust, except that depreciation and donation given to other trusts, will not be allowed. Only amount applied in violation shall be liable for included in the total income. Now only that income which is separately is being taxed. Moreover, in case of violation of the provision of 13(1)(c), 1D or 13(3), exemption under section 11 can be denied. So in such cases, only that income will be taxed, not the whole income will be disallowed. So that's also a welcome provision. That the impact will be to the extent of, because there is a lot of litigation is going on. The provision was says the exemption is to be denied. So the denial of exemption is now they have removed that only to that amount will be taxed in that year, and not 11 will not be, or 1023C will not be denied. There is now new section 115, 1115 it is written. It is correctly 115 BBI. So one is added wrongly. It is to be read as 115 BBI. Is inserted to define specified income of certain institutions. Now there is a definition of specified income. Moreover, such income of the trust is taxable at maximum original rate. There was a lot of confusion which income is to be taxed with the MMR or which is the normal. So here they have given that income accumulated set apart in excess of 15%, and if there is a default, then MMR. Then deemed income is referred to in explanation 4 to 3rd proviso, or 11.3 disallowance will be MMR. Then the same way 13.1D or 1023C, 3rd proviso, that will also be MMR. Then the 4th is income which is denied under 21st proviso, the new proviso has been added, or which is not excluded from the total income in 13.1C. If 13.1C applies, then that income will be taxed at maximum marginal rate. And any income which is not excluded from the total income under section 11.1C. So if the 11.1C applies, then those incomes will be taxed on the MMR. So there are 5 kind of income they have mentioned that there will be a maximum marginal rate. So there is some clarification to this extent. It's a clarification of specified that the expenses will be allowed, which will not be not allowed is also very clear. So the heading which we have given, we have seen that some clarification has been carried out. And the amount of income tax calculated at the rate of 30% of the specified income. Friend, penalty for passing unreasonable benefit to the trustee. Now this is very serious. If an unreasonable benefit is passed to the trustee, so in the first year it will be 100% of that amount, and if it is continued in the second year, it will be 200% of that amount, whether 11 or 1023C. From assessment year 2377, this penalty provision has been brought in for unreasonable benefit passed to the specific trustees or specified persons. Now, penalty of violation for the benefit of a specified person, this 271 AAE has been brought into, wherein the I have seen the penalty is to be levied 100% and 200%. Then treatment of donation received for renovation temple, some temples and gurudwaras and mosques and churches and other places, and those who are notified under ATG 2B, if they receive from this amendment is from 21-22 Ram Mandir, Ayodhya. So it's a good provision. If the money is received by them for the purpose of building a repair and maintenance, not new building. If it is repair and renovation and repair of the temple, notified temple, mosque or gurdwara, then that money at the option of the SSC, it can be treated as a corpus donation, and a specified income has been utilized in the repairs and renovation that can be allowed from assessment year 21. Some conditions are mentioned, which can be read here, because now I'll be go a little fast. Maintenance of books of account. This is newly on 10th of August. They have brought in this maintenance of account. It has been gazetted. Circular notification 94/22 updated to 10th of August. Now they have notified books of account. Here also you see what kind of books of accounts are to be maintained: cash book, ledger, journal, original and copies of bills. About the business undertaking, non-business undertaking separately. So business undertaking separately, non-business you have to keep separately. Record of projects undertaken. All records of projects which has been taken is to be maintained separately, because you have to maintain books of accounts and records for 10 years. That has been notified, and it is applicable. If you do not maintain, then procedure for cancellation can be initiated. So records of income, voluntary contribution, income from the property and other income, then details of application of income, charities, entities, and application outside India. If you have done any outside India application, that record is also separately maintained. So these are all to be, records are to be maintained, which is very lengthy. And investment, accumulation of investment in 11.5, those records and forms and 11.5 is to be maintained. Details of corporate donations with name, address, PAN number, and Aadhaar card. Aadhaar card is not mandatory, but if it is available, it is to be mentioned. And that is whether invested in 11.5 or not corporate donation, that record is separately maintained. Details of amount received for repairs and renovation, that is 82B, is separately maintained. Details of loans and borrowing, receipts, application, repayment, those records from whom, what, their address, PAN number, and all those things to be maintained. Details of properties held by the trust is to be maintained by the trust, and record of a specified person in transaction with them. Now, a specified person we can understand, trustees and their relatives. But there is one more specified person which are covered is really since last more than since 95 it is there. 95 and 15 and 22 means 37 years that 50,000 rupees donated by any person to the trust in the lifetime of the trust, aggregate in donation every year 5,000, then it is 50,000, then he is covered under a specified transaction. This requires amendment, because since last 35, 50,000 rupees, what is the value now? It should be at least 10 lakhs. So these are the books of accounts are to be maintained and records are to be kept. Only thing during the discussion, and the accounts are to books of accounts are to be maintained for 10 years. During the discussion with Under Secretary and Joint Secretary, they have clarified that for certain things, if the details, if the tally data is maintained, because you can maintain books of account physically, electronically, or you can printed, those all are permitted. But only thing is, if the details, cash book, now separate cash book maintaining is nowadays, nobody is separate bank account, separate journal book. So if it is maintained in the tally data or any other system, or any other way where this all details can be find out, that will suffice. That's what the Under Secretary and Joint Secretary has confirmed that, because we argued with them, and they have agreed, yes, if the details are can be find out, if it is mentioned in that, fine. But only thing is, now you have to advise to the all accountants of the trust that all the entries in the tally or whatever system they are following, or customized software if they have, so there all the narrations should be mentioned, name, address, PAN number, their details in that. And every year you should save on the hard disk of those documents, or closing entries are to be. I have seen many trusts, they don't pass closing entries. and yearly printout can be kept or hard disk copy can be kept. So this in future you can prove that these are the details have been maintained and that you have to keep for 10 years. Because now reopening can be done for 10 years. So now it is for 10 years. So this is what is books of accounts. And I think it is 7:30. From what question answer I can cover. My topic is generally it is over. Other amendments are there. That is not much relevant. Only at the end, before I say thank you and covering the, just a moment. I want to go for that earlier slide.
So onwards.
Yeah. On earlier side, I want to take 1 minute. No, the last one. Thank you, Anna. See, Income Tax Department in Bombay, they have shifted to new place and renovated. My last one more slide. This one. They put this flag on the entrance where it says the word charity connotes altruism in thought and action. It involves an idea of benefiting others rather than oneself. And this is Supreme Court has mentioned in the case CIT versus Andhra Chamber of Commerce. It is official saying of the Supreme Court that the charity is for others, not for the self. And it is their thought and actions commit to the activities. So thank you very much with these words. And I'll go to questions, whatever fast I can reply. Yeah, questions, please. Yes. Compounding fees paid by, yes. Now this is another issue has been come up, whether that compounding fees has been paid and it has been accepted. I think the provision says if it is reached to finality or if it is not disputed. So compounding of any offense or any compliance, if you have not done and you have paid that, I think on that basis you have been given an opportunity to pay the money and get rid of it. But one way it is reached to finality. So the wordings in the section says if it is not disputed or reached to finality. So whether compounding can be considered as reached to finality? I think there can be two views. You can say that my compliance whatever done, मुझे excuse माफी दी गई है और हमने ये पैसा उसका penalty भर के it is got over. But that getting over whether it reached to finality, I think yes. So commissioner can take that view. We have to see and watch because this is a gray area. We will argue and we have to argue that that compliance has been now accepted by the department and now that they have carried on that how can you cancel on that ground. So that is a course to decide. It's a matter of litigation. Another is 12AA4 material word is not there. Does it harass trust? This is for 12A. Yes, correct. This question is right. Department, does it harass the trust? Certainly yes. Because 12AA4 says material word is not there. So in that case, it will be treated as a harassment and court can take that view. And it cannot be with the appeal tribunal. It is the High Court has to that level, such matter has to be taken up. Otherwise, department is now, according to me, this is my feeling, there may be something that a department or their higher authority has got bias against the trust. Every year you will find so much of amendment and taklif. Income of certain persons, priests, tribals in any states are exempt from tax. Correct. if any payments are made to them which are otherwise subject to TDS, should TDS be done? Yes. Exemption of income doesn't give you right to not to deduct the tax. They have to take 197 or the certificate from the department, lower TDS or no TDS certificate. That exemption income doesn't give 1023C. If we apply for 1023C and get the non-TDS certificates. So there it will not give rise to, okay, by no, TDS is not to be done because the income is exempt. No, TDS provision doesn't say that. TDS provisions, it is unless that certificate is there. So TDS is to be done even that income, that is the recipient's responsibility. What are the payers' responsibility is to deduct. The next is while uploading details in 10BD, should it be only for donations eligible for deduction under ATG? Many NGOs file details, they are foreign grants too. No. See, foreign grants means FCRA donations are also to be, people have added, and 10B has been printed, but they cannot, they have not to claim, they cannot claim. So there is a clarification, I think some question answers where they are, wherein they have said those are not required to cover. It is under 80G5 and section 35. So 80G5 and 35. So where there is a 80G claim, then only you can there is a use of that, the certificate. So there is no need for adding that foreign grants, because foreign grants, foreigners will not get 80G, or any other people who are not entitled for 80G, then that will not be added. Where the 80G is applicable or where the 80G is to be claimed, those entries are to be done. A trust is running educational institution for the financial year 21 to the gross receipt of the where rupees 4.10 crore. The trust is neither registered TOLE nor 1023C. Whether the trust is under obligation to file income tax return? Yes. See here, 1023C says that their gross receipts are more than 5 crores, then it will not get the exemption. So 4 crores, 4.10 is a less than 5 crores. Financial year 21-22 means 22-23. It is increases from assessment year 22-23, but it is neither have TOLE nor 1023C. So they are not falling under income tax. They have to file their return as a unregistered trust. So these provisions are applicable to the registered trust. See, then you have to file Form 5. At year 7, you have to claim Section 57. Amount is spent to earning that, and it's education institute. Education institute is a major is expenses. So they are out of the net of the exemption provisions. So they cannot get the 1023C 3AB. No, 3AD. Last is 3AD. The trust is having book profit of more than 2.5 lakh during 21-20 years. They have to pay the tax on that. Because the having book profit, you have to compute as per Income Tax Act. The income is to be computed as per Income Tax Act. It's a non-registered trust, AOP, you have to file the return. Because you are not having TOLE, not having 1023 approval, so it is unregistered trust. So unregistered trust has to be assessed as AOP. Whether for all local donations, filing of 10BD is necessary. If the donor is not interest in ATG, then also is it necessary to file? See, there is no bifurcation or division has been given in the 10BD form. 10BD form says that details of all the donations received by the trust is to be filed. and copy is to be given to the donor, and on the basis of that certificate they will claim, or on the basis of automated deduction will be available to the donor. So here there is no any mention that if ATG they are not interested, we will not file. No, the trust has to file all the entries, whether they claim, not claim, 10B they accept, they do not accept. What is the 10BD is a duty or responsibility of the trust. They have to file that return, otherwise there is a huge penalty. Filing is that, but if something is missing, then there are penalty. So they should file all the entries, whether the donor is interested or not. There are problems, small amounts. There are so many trusts, they get continuously say 1,000 rupees or 500 rupees whole year. So many of entries are to be added in that. It's a practical problem. But the law says 10BD should be for all the donations received by the trust. Whether a registered trust donate to another non-registered trust can claim as expenditure. It's a good question. Because they said donation to a trust which is having toilet registration. So technically, because whether a registered trust donating a non-registration trust is not falling under that provision, that can claim as application of income because the donee trust is not registered. The provision says if it is a trust donating to another trust having registration, means exemption from both the places. Here there is no exemption to both the trusts. Non-registered trust, it becomes an income. There, the donor is also getting 11(1)(d), and donee is corporate donation. The donee is getting 120, and the donor is getting application of income. Here, the donee has to be an income. That will be his income. So corporate donations will not be allowed 11(1)(d) because it's a non-registered. So income, there is a judgment, criminal judgment, wherein says corporate donation is always a capital receipt. It's a matter of litigation. But the provision says it can be claimed as application income by the donor, and it will be an income of the donee trust. So it is balancing. One way income tax is levied, both were getting exemption. So to cover that situation of both the trust getting a exemption, this provision has been brought in. For considering the audit limit of 2.5, only donations have to be considered. Yes, donations has to be considered. Corpus is also to be that I have covered. If the trust has a gross collection from its activities is 30 lakhs and the net income is 2 lakhs, the audit is required. In consequences, the audit report is not uploaded by 30. By audit is required in this case. Audit report is to be attached. And tax payable is different issue. Computation of income is different issue. But if your gross receipt before giving the exemption or calculating exemption 11 or 1023, see if it is crossing 2.5 lakhs, here it is 30 lakhs, audit is applicable. If it is not filed with 30th September, then condonation of delay circulars are there. There are so many circulars for condonation of delay for 9A, 10, 10B, and generally it is granted in the genuine real cases. Very few cases it is rejecting. So in case of delay, condonation of delay can be applied, but audit report is to be required to be filed in this case. And 30th September and 30th October. Carry forward of excess application. If applicable only prospectively after 31/3 or even please accumulated excess application now. From 22-23, no adjustment while computing. The provision has been drafted in such a manner that explanation 5 which has been added is drafted in such a manner by calculating no any earlier loss or excess spending will be considered for computing. You read the wordings and it says very clearly it will not be at all allowed. Whether you incurred past or whether you incurred in current year or whether you incurred in future year, it will not be allowed. Matter is over in that year. Even 15% also you will not get because spending is more. Now, if a trust, please, if a trust not involved in the business, and if its total collection from its charitable activities cross the tax audit limit, no. Tax audit is for business only. 44AB falls under chapter of business and profession. So tax audit is applicable if the trust is having separate business and business activities, wherein separate books of accounts are maintained, and the turnover is now it is 10 crores. The turnover is above the limit prescribed in 44AB, then only the tax audit. My view is that then it is applicable. There are opposite view has been expressed by so many professionals that tax audit is not at all to the charitable trust. But when you are having a business 4, a business undertaking 4A or 4, 11, 4 or 4A, then if the turnover is crosses the limit of prescribed 44AB, tax audit advisable to, it is according to me is applicable and you should file the tax audit. Next, please. The trust came into existence in the year 2000-2001. The trust is running education institutions. The trust in 2000-2001. Oh, so old. The trust got provisionally registered on 7/4/22. As per section 12AB, the trust or institution who has received the provisional registration must apply for a permanent regular registration, because there is now no concept of permanent registration, by submitting form 10AB at least 6 months before the expiry of the provisional registration or commencement of the business, whichever is earlier. The trust has commenced charitable activities for more than 20 years. Now the question, when it should apply? Immediately. I have said in my earlier, there is cover in my lecture, you should just immediately apply for regular registration. I have seen in one case that they are applied in the next month, and in the 3 months they got the regular registration. Or the 6 month time is there. You can say for my provisional it is 6 months. My commencement is done on the same day. But there is a issue because there is no issue, there is no clarification. It's better to apply immediately and get the regular registration, and they are allowing. Whether the application is allowed only on payment basis effective from 22. This is really still confusion, because there are so many press release or so many. I think tax fine has also given 22-23. But while passing the budget, if you see the memorandum, while passing the budget, they have extended 1 year from 23-24. So on the payment basis is from 23-24. This is my understanding. You can check it. If I am wrong, you can. I think I have given my email ID. So any member has got any such question problem, you can send me a mail. I will reply as per my convenience, not urgently. So you can ask me any question. It is allowed. So here. If I am wrong, you can convince me that it is 22-20. According to me, it is while passing the budget, it has been made 23-24. The person wants to start a trust in Telangana. Good. Go ahead. For providing medical facilities to general public, under which act the trust need to be get registered. State Charitable Act or just trust need to be registered with the Registration Act. Correct. They want to apply. Yes. This is all going on. Only 12 state has got local authority, local case, except Section 8 company. Section 8 is a company law, is all in Indian law. Here they should draft a trust deed which has got charitable objects, which has got all the required. Not for the it's for the general public, not for a particular community or cause, not for a benefit for profit. And the object should be charitable, and that trust deed nicely drafted. You get it registered with the register of assurance, pay some whatever charges. There's a document registration, and that registered that you get the PAN number and then go for 12A. ATG. You will get it. It is they are giving. In other state also there is no local law. Anything else? One more is there.
Last one.
Okay. In Form 10A, wrong session get mentioned for registration of ATG. Therefore, CIT only provided provisional registration. Whether can we submit 10AB to get the permanent registration? That option is open to you. There is no, that's what I said in my lecture between, okay, there is no any such correction method is provided. If date is missed, you have gone. If any simple, this mistake has done by many people. I have come across so many inquiries, what is to be done about in such cases. So they have lost that. There is no any continuity. You can go and apply to CBDT that this mistake is occurred. Kindly condone the delay or condone the make us make it correction. But you can think if you are applying to CBDT, how long they will take. So it is practically you apply for provisional registration and immediately apply for regular, and telling that the reason for this is because of you have done a genuine mistake in uploading that writing that wrong code. The mistake is occurred. So please grant us this, and then you have to prove. Then they have to keep their record up to date. So you can go ahead with that, and please practically advisable go for that. Thank you very much. I think I have done some longer time, nearly 1 hour. But because there was a delay, so I don't mind, and you say it was good to such intelligent, good questions were also there, and whatever possible for me, I have done it. Thank you very much. And members can send me a mail for any difficulty. I'll try to clarify that. Okay, yes, thank you very much. And I thank, once again, I thank Southern India Regional Council for giving me this opportunity to share my views and to explain whatever my knowledge practical, because day in, day out, I'm practicing on charitable. Thank you very much.
Thank you so much for your excellent time spent here for the past 2.5 years to 3 years nearly. Actually, you took a question for at least half an hour. We have missed some questions. We'll mail it to you when time permits. You responded to them, so we'll share your mail ID. And when they find it, they can respond to you, sir.
No problem. And, you send me those questions. I will certainly send it.
When time permits, you can respond to them, sir. And presentation can be shared with the audience, right, sir, as a PDF file after this session, so that they can circulate to the audience, registered audience alone.
And can circulate.
So presentation, the material that is used, background material, right? Can it be circulated among the audience?
Yes, I have sent to you. You see, yes. I have not mentioned my opinion in that. I have mentioned the provisions, so it can be circulated.
Yeah, just taking a consent, sir, before sharing.
You circulate to all the members what is there.
Yes, sir. Thank you so much for time spent. On behalf of SCSC.
Go ahead.
Thank you so much. Thank you, sir. Welcome back. Thank you.
Okay.
I'll end the session. Thank you.
Yeah, okay.